Hey guys, it's me, Bet Hochberger, CPA, CGMA, and since we are continuing down this path talking about year-end tax planning, I'm going to make a little bit of a switch in what we talk about. So today we're not going to talk about specific things to do to lower your taxes, but rather how do we make sure we have enough taxes paid in, right? The reason this matters is we're trying to avoid these underpayment penalties, and the IRS has gotten very vicious about these in the last couple of years. I've seen so many letters, clients confused, not understanding what happened, but there actually are a couple underpayment penalties that you can get hit with when you file your taxes if you don't have either enough withholding or you don't have your estimated payments made during the year. So, and we've seen a lot of this actually happening since I want to say like 2018, 2019. They changed the whole W-4 form. That's that form that you file when you're like starting a new job, right? And we used to all, like back in the day, you would say, okay, if I wanted the most money taken out of my paycheck, if I wanted the most withheld, I would put that number at 0. And if I wanted the least withheld, I put it at 9. And it was a short little form. Now it's like a whole ordeal. And whatever they did to change that form, we have been fairly consistently over the last few years seeing people who never had owed taxes owing taxes. So something changed in that formula. We're seeing this a lot. You need to make sure, if you look at like your pay stub, right? What is my year to date withholding? Is it high enough? Now, how do you know if it's high enough? Great question. So there's two ways that you can calculate this. So to avoid these underpayment penalties, you either need to be 90% paid in for the current year, right? So right now we're talking about 2024. So if you could do a little math, figure out what your tax bill looks like for this year. Are you paid in at least 90% from your withholding? Or you have to be 100% paid in from last year. That one's sometimes easier to figure out. If you filed your taxes for 2023, you'll know what your tax bill was. You'll know what your withholding this year is. Is it enough, right? Is it going to be enough? Now, the only caveat to that is if your adjusted gross income is over $150,000, now you're looking at you need to be paid in 110% of 2023. But still, easy enough math to do. You can say was my total tax in 2023, multiply it by 110%, or otherwise 1.1. Then you can figure out what that number is. Is my withholding high enough? Now, what do you do if it's not high enough, right? Well, you have a couple options. Number one, you can increase your withholding, right? Talk to your HR person, whoever does your payroll, and say, hey, I need through, the month of December, I need my withholding increased so I don't end up with these penalties, and they should be able to help you with that. The other thing you can do is you can make an estimated payment for the fourth quarter. Now, if you ask me, you're better off having it come out of your paycheck through withholding. And the reason is, per the IRS, any amount of withholding that you pay in during the year is automatically considered timely filed. So if you had 0 withheld, I'm not saying to do this, but just say theoretically, if you had 0 withholding the whole year, and then, in December, you're like, I'm going to withhold all of my tax all in December, as long as you're hitting those safe harbors of the 90% of the current year or 100 or 110% of the previous year, no missed estimated payment penalties, no underpayment penalties. You're not going to have any of those penalties. But you could have some penalties if you're doing it as an estimated payment at the end of the year instead of equally through the year, right? Depends on your specific situation. But doing it through withholding is like the safest way, right? When it comes to the IRS, it's the safest way to deal with it. Now, for those of you guys out there who are not on payroll, right? You don't have these W-4s, you can actually have withholding come out of other sources of income For example, if you're on Social Security, you file the form W4V to have income tax withheld from Social Security payments. And if you're getting paid, if you're like retired and you're old enough that you're at the point where you're taking money out of IRAs, that you can contact the financial institution and say, hey, I need withholding. Now, their default's going to be 10%, probably not enough, right? But if you contact them and say, hey, I need more than 10%, they can do it. They can raise it, but 10% is like their default. So that's kind of it, right? Let's make sure we're paid in. You've got enough time to make changes, right? You still have like the whole month of December basically. So do that math. Now, do you need help with that math? Are you not able to figure out what those calculations look like? We do offer tax planning and tax strategy, and we might even find some ways to save you some money as well. But that wasn't the focus of this video. It was really just make sure you get those tax payments in. So you got any questions? Drop a message and we'll